everyone, and thank you for tuning into the North Main Minute. I'm Josh Woodobie. A broad planning strategy that we're discussing all the time with clients, but sometimes, frankly, it gets pushed to the side in terms of thinking because the market is doing well, and that's the broad idea of portfolio diversification. Now, that means different things for different people. If you're 25 years old, that may mean one thing. If you're 75 years old, that probably means something different. Not necessarily, but probably true. But in thinking about this idea of portfolio diversification, what are some important things to keep in mind? I'm going to give you a couple of broad ideas. First, mentioning that everybody's situation is unique. Very important that you take a look at this in the context of your own goals, desires, and portfolio. But one of the things you want to concentrate, perhaps, especially in a year like this year, is when you're looking at how the stock market indices have done, you may think that everything, quote, is doing very well. We'll take a look a little bit deeper, peel a couple of the layers of the proverbial onion, and you'll find that that's not necessarily the case. In this particular year, there happens to be one segment of the market which has done very, very well, and there are some segments which have done okay, and there are other segments which frankly have had pretty miserable years this year. But that sometimes gets overshadowed when we just look at the year-to-date performance, again, of the most oft-quoted stock indices. So you want to make sure that you understand exactly what's happening. And that leads me to my second point. It can happen, and this year is one of them, just like last year was. It can happen that the performance of a relatively small number of stocks is what is powering or pushing these stock indices in the ways that they are. That's true this year. If you look at it, the S&P 500 index, for example, approximately 11 stocks out of the S&P 500 index are responsible for almost 90% of the gain in the S&P 500 index this year. I'll say that again. Approximately 11 stocks are responsible for almost 90% of the positive gain in the S&P 500 index this year. They happen to all be part of the same sector. You probably would know the names if I would recite them here. I say that because it's very, very important to understand there are 489 other companies in the S&P 500 index that on average then are And that's important to keep in mind when we're talking about portfolio diversification, because where you have a small number of stocks that are really doing well, you can get over-concentrated or overly intense in a relatively small segment of the market. That's great when things are doing well, not so great when that particular sector doesn't do as well. So you want to be mindful of that as you're looking at your portfolio, especially as we're making the sprint into the end of the calendar year. If you'd like to reach out to us at North Main Financial Group, perhaps you never thought about portfolio diversification. Just looking at green arrows and red arrows, which isn't bad, but maybe there are ways in which you can diversify your risk a bit and mitigate some of that downside. We'd love to hear from you. NorthMainFinancial.com.